The market indexes have illustrated over the last few weeks that they were breaking out of all-time highs up in this area. But they didn't do it with huge surging big days. They did it on the basis of a pattern, the J-hook pattern, showing that there wasn't great exuberance. They're just a nice steady uptrend. What that means for the long term is if they've broken out of this consolidation stage, which kind of had a resistance level at this level for the last 18 months, but there's a new dynamic in this market. Now, the other assessment is, did they spike it up and they're pulling it back? Currently, they have not been able to close the Dow back below the T-line. The Nasdaq also has illustrated of waffling right here at the T-line, but no great confirmation selling below the T-line, making the uptrend still in progress. Now, the uptrend, as we can see, is not a spike up. It's up, pullback, up, pullback, up, pullback. This is a much stronger trend analysis in the sense that they're taking profits along the way, so there's no exuberance built into these markets. Without evidence of any dramatic selling pressure changing the trend or the investor sentiment of this uptrend, it allows us to take advantage as candlestick investors of patterns that we know are high probability patterns, such as Micron, ever since it did the kicker signal, did a J-hook pattern. Wave 3, this being wave 1, wave 2, wave 3, right up to the resistance level, the recent high. Now it's got wave 1, wave 2, notice where it came back to, right back to the T-line. When it came back up through this level, we knew that we probably had wave 3 going to be the same magnitude as wave 1. This allows us to do the exact entry, whether you're buying stocks, calls, or call spreads, right at the right time, not having to wait around to see if a price move is going to work or not once it's confirming. A pattern confirmation is very important, as we can see in our expected recommendation on LYB last week, where it closed right on the T-line. If it had opened positive and traded positive, we'd had a scoop pattern bobble breakout. The fact that we can see that it opened lower and traded lower right at a major resistance level and our breakout level told us not to get into that trade. The same scenario can be applied to Western Digital. Notice the bobble breakout right here at this resistance level, J-hook pattern, makes it very simple. If they open this positive tomorrow, the probabilities of being in wave 3 is extremely strong. Once again, the confirmation allows an investor to put on a trade at the exact time that it's moving versus waiting for that move to possibly happen. If this opens positive tomorrow, you've got numerous trade options. 1, you can buy the stock outright. 2, you can buy calls outright. Or 3, if this is a wave, you can calculate what your next call strategy would be as far as doing a bullish call spread. Being able to witness when a pattern breakout is occurring, like a fry pan bottom J-hook pattern, allows investors to get in at the appropriate time on any trade. Once it breaks out, we've got very simple trend criteria. We can stay long until we see a sell signal and a close back below the T-line. Using the simple criteria and the simple confirming indicators with applying it to candlestick analysis just puts you in the high probability trades and tells you how long to stay into those trades. That'll be it. We'll see you in the chat rooms.